There were a number of things I think are good lessons learned for the Radnor process. One, obviously, making sure your documentation and intent of the transaction, as well as your conduct during the case, kind of follows the very strict guidelines. Obviously, we did that in Radnor. I think the management team here was definitely a clear weakness and something that we later addressed, but it was something that it has been a lesson learned for me at least in terms of future situations. And then, lastly, I think the bankruptcy process, as we discussed in the case study, has been precedent-setting, but there were a number of things during the bankruptcy case that I think are lessons learned for any secure lender in terms of conduct during a bankruptcy and pre-bankruptcy and during the bankruptcy. So I think a number of lessons learned. A lot of people, I think, have used this case as a benchmark or a model in terms of what may happen in this next distress cycle. Given the facts at the time, I think we made the right investment decision. Obviously, the result was not what we expected. And in hindsight, we'd rather not have made the investment. But I think given the facts at the time, I think the investment had merit. And I think the ultimate outcome actually was right. The structure that we used protected the downside and allowed us to have a lot of upside if the company actually was successful. Clearly, it was not in this case, and we had to rely on those protections, and they were tested. And we were lucky enough that we had the safeguards. But in hindsight, obviously, it would have been better not to make the investment. But with the same facts, I probably would have made the same investment. It's hard to say any industry right now that's really safe. Clearly, the type of distress and the downturn that we see in the economy is affecting all industries really in a pretty broad basis. There are clearly some that are getting disproportionately affected, such as autos and perhaps building products. But I think at this point, I'm hard-pressed to even name one sector that's not really distressed. Maybe collections or distress advisors, perhaps. But it's very much broad-based. What I would say is the type of issues that we saw in Radnor are probably more prevalent in the capital structures that are more complicated, where you have different layers to the capital structure, and where you have perhaps 2 or 3 sometimes types of secure lenders, plus unsecured lenders, and obviously trade claims and the like. And those are going to be very difficult cases, and where people are going to probably encounter a lot of the issues that we saw at Radnor. I definitely think there are aspects of the bankruptcy process that could be improved, but I think overall, if you compare the bankruptcy process in the U.S., I think it's one of the best in the world. It actually allows companies to restructure in an orderly fashion and reorganize, and in many respects, it's what allows our economy to go through difficult times like now. One of the issues is not really related to the bankruptcy laws per se, but I think that we have an issue with is the availability of DIP financing. I think that, we touched on it in the Radnor case study, but that's going to be a very significant issue in this process, because right now, given what we're seeing in the credit markets, there's really a lack of availability of DIP financing, and that I think is an integral part of the restructuring process. And without DIP financing, I think some of these restructurings will be a lot more difficult.